right. Well, good afternoon, everyone. Good morning. Good evening for those of you in Europe. I'm Yuman Sang. We're going to just wait 1 minute to get started. People are filing into the Zoom and it takes a few seconds for folks to come in. But hoping everyone is having a great day. We're going to have a really good webinar. So we'll get started in just a second. For those of you who want to follow along, we're going to be talking about the Customer Success Leadership Study. It's actually available already. And if you go on the Churn Zero site under resources, you will be able to download it. We'll be sending it to you after the webinar as well. So if you don't have time now, you will get access to it very shortly. So let's just wait until a few more people get in and we'll get started. Once again, this is the 2024 Customer Success Leadership Study. And I'll be introducing my guests, John and Kerry, real soon. I want to wait until we have maybe a few more people and then we will get started. If anyone has any issues, we will be doing Q&A. So please use the Q&A function to drop in questions. We have some really smart people on the line. Let's take advantage of their thoughts, both from a sort of research point of view and then a CS point of view. All right, let's get started. Hi, everyone. I'm Yuman Sang. I'm the founder and CEO of Churn Zero. And welcome to the webinar. We are here to talk about the 2024 Customer Success Leadership Study. Just a couple of points of administration. We will be recording this webinar. We will send you a link to that. We will also send you a PDF of this presentation, as well as a link to the study. And you'll get all that tomorrow at the latest in a follow-up email. So, if you want to take notes, feel free, but you will have access to recording. Well, I'm pleased also to have two people join me, John Gleeson and Kerry Cunningham. These are folks I have met before, I've seen speak before, and so you're really in for a treat. So let me have John and Kerry introduce themselves. And my question to you is, why did your organization participate in the study? And then tell me a little bit about what you do and what your organization does. I'll start with John.
Cool. Okay, so I had two organizations actually that participated in it. So my day job is with Success Venture Partners, where I'm the founding GP. Success VP is a fund where the LPs are some of the best chief customer officers and VPs of customer success in the world. So we're talking, Toast, Aurora Solar, Monday.com, Slack, MuleSoft. It's this stacked roster of these incredible CCOs. So number one, I wanted to participate because I wanted the insights of those folks in this survey. And I wanted to help my LPs along and just get this rich data set that we could understand the future of customer success. I think data drives a lot of things, and I'm really excited about the data. So that's why we wanted to sponsor from the perspective of Success VP. My passion project, though, is this thing called the San Francisco Customer Success Meetup, which is also in New York as well. We've been doing it for 10 years. I do it with Janan Pang, who is the VP of Customer Success at Intercom, and Monica Perez, who's the head of Customer Success at Notion. And for us, I think we identified early on, Yuman, that we wanted you on stage at our event. And we wanted to bring these insights, these unique insights live to the world there. So again, I think data-driven presentations with some real substance, insights that people have never seen before are pretty compelling. And we thought this was an inside line to work with you. And I'm going to give Churn Zero a shout out too. When you host an event like that, our meetups are, thousands of people. And the only way we do them is with sponsors. You get to understand the DNA of a company when you work with them on sponsorship. And it was pretty amazing to work with the Churn Zero team. You've assembled quite the roster of great folks. So hats off to you, Yuman.
Thank you, John. I appreciate it. But by the way, really a quick thing. CS Week in New York really was a great time, good content, good vibes. People were really excited to meet each other. There are not that many really good independent CS get-togethers. Vendors like ourselves, we throw it and we try to make it industry get-togethers, and we hope we do a good job. But a true third-party one, there are not many. So if you're interested in one, CS Week, in New York was fantastic. And of course, all the meetups in San Francisco, definitely do that. And hopefully you're going to go to different cities. So that's my hope for you, John. All right. Well, thanks for doing this. And Kerry Cunningham.
Yeah, great to be here. So I've got two motivations for being here as well. One is that Sixth Sense cares very much about everything to do with producing revenue in B2B, and customer success is extremely important to that. And there are a lot of great Sixth Sense use cases for customer success. So there's that. Then on the personal side, though, I was co-author some years ago of the demand unit waterfall at Serious Decisions, and then its successor, the B2B revenue waterfall. And the big difference between the two was the B2B revenue waterfall incorporated all of the existing customer opportunities, cross-sell, upsell, and retention. And so we spent a lot of time within Forrester looking at what was at stake with all of those kind of opportunities, making sure we understand that. And, it was really clear that, to replace one customer you lose requires hundreds of pipeline opportunities, depending upon what kind of deal you're in. And the minute you see that, I don't know why you would look away and think of anything else. It's both scary and looks like a great opportunity as well. So really those two motivations. And I hit up a research and thought leadership practice at Sixth Sense. We're doing research all the time, and given the opportunity to participate in this one, I thought, wow, this seems like a lot of fun, and it has been.
And by the way, Kerry, I listened to Kerry speak at previous conferences. He does a good job of taking data and actually making it understandable. So I'm glad you are here. All right, let's talk about the 2024 CS leadership study. It's the fifth year it's been done. It's the largest CS study in the industry, and many of you, hopefully, actually on the call were participants, over 1,000 participants. So, that's fantastic. All right, well, let me tell you sort of at the highest level what's happening. The last few years have been tough, really left a mark. And because most of you in CS are also likely in SaaS, right? The overlap is very high. And it's been a very tough go over the last 24 months or so. And so the study will show that. We'll talk about a few things, right? Where the last few years have been tough. Feels like maybe there's some stabilization, if the stabilization is bumping along the bottom, but stabilization feels like it's here. And we'll end with, sort of the notion of where we think the future lies for CS, right? So you're not alone. If you've had a tough few years, it has been tough. And let's start with NRR. NRR has declined since 2022, right? So a steady decrease since 2022. Kerry, tell us about the numbers. Does this feel right? Does this sort of jive with what you see out there?
Yeah. So we took the bad news first approach here, right? So this is, it's not good news. You don't like to see these numbers declining. I think there is a piece of context that's important. So we had markets that were raging prior to 2022, and there was a lot of cheap money. And when you have that, you will acquire customers that you probably shouldn't, that are not actually great fits and aren't going to get a lot of value. You'll also have a lot of customers who, when times turn down, are not going to do well enough to spend money of their own. So those two things militate against having a good NRR when times become a little tighter, which they certainly did. One thing everybody should think about when you look at this chart. So the bottom line on the x-axis is at 80%, not zero. So you see a decline here, and this decline is not good news. You never want to see a decline, but it's not a massive decline, right? So it's an unfortunate decline. It's one that happens across a few years. Now, I would also say it's a little bit of the situation of boiling the frog in the pot, the cliche about putting the frog in cool water and then gradually turning up the temperatures, and it doesn't notice that it's suddenly too hot. I think that's what we risk here. These are not enormous declines year over year. In fact, year over year, they're not statistically significant. But from 22 to 24, it is. And so we don't want the number going in this direction. You could dismiss any 6-month period and say, so what? But you shouldn't say, so what about the 2-year period? That's a problem. So I think we really need to make sure that this gets shored up. I know people have different opinions about NRR as a metric, but to me, it seems like it's a really important metric, and one now that we really should. Now that I think 22 to 23, you could say, okay, we lost some customers that probably we shouldn't have had in the first place, but you didn't gain any customers in 23 you shouldn't have, probably. And so you need to hang on to those.
So John, you were just with hundreds of CS people. Does this chart jive with their feelings and what they've told you?
Yeah, for sure. I think, when we think too about, and we've got great slides coming up in a moment here on just like, the state of funding and kind of the get lean mentality that a lot of startups have had to execute on. But when we think about the SaaS business model, right, it goes with seat count, right? Some companies have a consumption-based pricing model, but if you have more people, being hired, one of the natural things is you're going to have great NRR. More people joining a company, more licenses, NRR is going to grow. As we saw the contraction over the last couple of years, in headcount, everybody worrying more about, margin and burn. One of the natural things was just we were going to see a contraction in the software licenses that you need. So I think there's a big tie in here, NRR, and just the state of the market overall.
In fact, as I move to the next slide, I would say the people in the audience, sorry, CS people in the audience, you're part of the problem, right? You're part of the problem. So when we surveyed you, 66% of you have delayed your purchasing decisions by at least 3 months, right? So these are, budgeted projects, budgeted spend, and 2/3 of you said, all right, my company needs to push this out at least 3 months. And sometimes, as you know, you push it out 3 months, you push it out forever. Anything interesting about this, Kerry, or is this just kind of more of the same with the NRR?
Revenue delayed is revenue lost, and I think that's that's the way I think about this. Anything that gets delayed is likely to be put off forever, as you said. So don't want to see this, but this may not be as much a CS problem as a broader one. Maybe John feels differently about that.
Yeah.
When I look at this, I think, I before starting Success VP, I was an operator. I led in a company that was growing incredibly fast and still is actually. And when we're in those periods of time where rates are low, there's lots of money in the market. There's only 3 things that matter, and it's growth, growth, and growth. And when things shift, it probably slides back to, okay, growth still matters. Like, don't let anybody fool you into thinking that growth isn't important. It's the most important metric. Trust me on that. But number 2, you're worrying more about your burn, and you're worrying more about the margin. And one of the ways that we, reduce burn and try to increase margin was by, laying off people and by reducing software spend. And I think like the pain of the last couple of years is still fresh with a lot of folks. I had to go through layoffs in the company that I was with, and it's one of the most painful things that you're ever going to have to do in your career. And so when it comes time to spending money on the other side of that, people are reluctant to go back to that because the pain is so fresh. And I think that's, this is just a product in a lot of ways of human nature. You got to remember, businesses are powered by people behind them. And I think those delays are rooted in real pain. The other thing that I would say too is like buying cycles have shifted, right? It takes a lot of effort to control spend, right? There's a lot of people in an organization. And so what we've seen too is, and I see this in the startups that I work with, that buying decision has shifted maybe from the director or the VP level up to the C-suite, or maybe final approval by the CEO. I'm sure Yuman at Churn Zero, the buck stops at you. And there's just more scrutiny. You can't, those bottoms up plays can't slide into the organization quite the same way that they could a couple of years ago.
Yeah, on the great American Ninja obstacle course of getting a deal done, there's 3 more things added, that will kind of, you have to run through in order to make it happen. It is very hard. Now here's something interesting that kind of surprised me. Well, okay, maybe I'll ask you if it surprised you, and maybe Kerry. we lost 11% of companies, respondents actually lost CS roles, right? So basically the CS ops role were lost in 2024. But we push it a lot. We love ops. We think that a modern, well-functioning CS team has operational folks, just like sales has ops, marketing has ops. We took a hit here. Any thoughts on that, Kerry?
I think so. So, one, again, if you're thinking about what it was like prior to 2022, you're adding people, you're adding roles, you're trying to keep up with the new customers that you have, and you're probably not able to do it very effectively, but we're all building staff. Then you hit 23, and we're not adding a lot of new customers, and the demand for bodies and for time to keep them satisfied is just not as high, right? So we overbuilt. Now we're underbuilding. In the old days, we called that right sizing. I think that term went out of fashion for a long time ago, but nonetheless, it's kind of, I think, part of what you see. I do think there are distinct elements of operations distinct to customer success that require specific kinds of expertise, and that would suggest having specific expertise in operations roles. But when the numbers don't support it as much as they did before, then I think that's when they start to drop off. One of the things I did notice in the data that's not on the slide is that more mature companies are not experiencing this decrease in CS operations roles. So those companies that were already kind of built up, probably not growing as fast during the lead up to 22, but more moderate growth then probably had staffs that were more appropriate to the amount of business that was coming in and the customers that they had. And I think that's kind of where we're going to get as we talk about leveling off and being more modest in our growth going forward.
So maybe as companies sort of reach maturity, maybe reach a cruising altitude, ops are going to be a part of your CS team, right? I mean, that's sort of what right. And then maybe as you're growing, it's, you hire your first ops person, that there's a little bit of the last in, first out, maybe. But anyway, but interesting, like for those of you who are in the CS, I would, John, make sure, you probably have this advice. I think ops really, the way you think about ops is, can you increase the productivity of all your CSMs by 10 to 15% by having an ops person, right? And that more than pays for that ops person. So I think that's an important thing. All right. Hey, by the way, let me move to the next slide. I'm going to go off the study.
Oh, this is the one. This is the one.
This is the one. Yeah.
This
so
is the one.
Let's go. So this is you. This is your business, John. Funding rounds have been down, both in terms of total numbers as well as number of deals, right? Actually, number of deals is probably, they actually dollars are down, maybe a little bit up in the last few quarters, but really down since 2021. Does this explain everything, John? Is this right here the answer of why we all, NRR is down?
Well, man, I think there's so much we can unpack on this slide. We could probably do a webinar on this slide. I'm actually, like we talked before we got on the call, I'm calling in today from a conference, and it's a conference with the people who allocate to venture capital funds. And I think sometimes, like when we're in a startup, we think the thing that we're doing, or we're in a technology company, the thing that we're doing is the most important thing in the world. And we look at the one notch, maybe that funds us, which is the VCs. And the VCs, they have to go out into the world and they have to raise money for their funds as well. And so through 2021, it's been well documented, right? Rates were historically low. We saw a flood of capital. Well, when that happens, these allocators, these LPs who put money in the venture capital funds, they slide to riskier assets, right? They need to get a return. They slide to riskier assets with the potential for a higher return. And we saw a lot of money flow into venture capital. And so that explains that spike, that 2021 spike. Now, the thing that people forget is that, it's not like publicly traded stocks. You can't just undo that decision overnight. A venture capital fund is, is 10 years. The life of it is 10 years. So it takes a long time to reallocate and reshuffle things around. And so we're living through that period right now. And I think like at face value, if you toggle to 2023 and 2024, you might think, okay, wow, we're back at historical levels. This is okay. We're around 2018. The pain is done. The medicine has been taken.
Mhm.
But the reality of that is if we were to look at, let's say, Q1, Q2 of 2024, and we look at a bar chart, a lot of that bar, so that's in billions of dollar figures, is disproportionately flowing into a handful of big funding rounds. And for everybody else, those mid-stage startups, Series B, Series C, Series D, it's still a very, very hard fundraising environment. Probably one of the hardest fundraising environments on record. I'll put this in perspective. A lot of those mid-stage and certainly seed stage venture capital deals, they get done by smaller funds, emerging managers. It's not always the Andreessen Horowitzes and the Sequoias of the world that do those. In 2021, there was 420 new funds with first-time managers that came to market. Put that in perspective, this year, there is only 28 that came to market. And so there's a real, desert when it comes to capital out there. And I think that's going back into those, that pain. Not only is that pain that a lot of companies live very real, there's also, they may not raise another venture capital round. And so because they can't do that, they have to live with what they have right now. So yeah, this is very real. There's a whole webinar we could do on this. But the reality is like that trickle down macroeconomics, I didn't appreciate it necessarily when I was operating. And now that I'm on the other side talking with pension plans and hedge funds and endowments from around the world, I really understand that we are just a small little piece of, a global set of asset classes.
But John, you're at a conference right now with your peers on the VC side. What's the vibe? Tell us. Or is 20 look into their crystal balls? 2025 is going to be good. It's a good year, tough year. Like, what do you think?
It's interesting because I think everybody is very excited about the future. A lot of the conversations that I'm having, they start with, we think that now is one of the best times to invest, actually, because we've got almost a technology shift happening, right? It's almost like, they equate it to, hey, this is like, investing maybe at the dawn of the cloud, right? And there's a lot of things that will get built. In the same breath, though, there's still a lot of confusion, right? Every week we're still seeing very large venture capital funds mark down their portfolios. And so there's still a confusion. These allocators, they may not even know the value of what they own. There was one last Georgian in Canada, actually. They marked down their portfolio by about $500 million, right? This is wild. So we see this still happening. So there's still like this pain. I'd like to get involved in this next technology shift, but I have a little bit of a stomach ache as I reallocate and digest.
So optimism, but probably preparing for a little bit more of this pain. Kerry, your 6 cents actually, one has raised money, and two, probably many of your customers have raised money as well. What's your firm seeing? What do what are you seeing inside your own company?
Yeah, well, I think we're all tightening things up a lot and looking at how we produce some profitable growth going forward as opposed to the growth at all costs. I know that's kind of what everybody is saying, but that's really what we're doing. And I think that making sure that your customers that you have stay with you and grow is at the very core of that. Becoming profitable does not look like investing or getting tons and tons of rounds of just throwing money at acquiring new customers. I think you have to acquire new customers, but making sure you hold on to the ones that you do seems like certainly what we're focused on and what a lot of our customers are.
Well, if you can follow my hopefully you can see my mouse. Can you, John, can you see my mouse on the screen? When I
Yeah.
move. All right. This part, that's weird, right? This little this little mountain here, that's just weird.
Yeah.
And in many ways, really a calm growth, would have a steady line. And so we are
Yeah.
literally hung over from this bananas period of time. So
Yeah.
and in fact, one of the things that you may notice is maybe when you talk to your neighbor or your in-laws, like maybe they don't feel the same way you do, right? Maybe they're in some other so most people I think feel, maybe even your 401k, you're like, oh, my 401k is okay, right? Because these are 4 lines from 4 stock indexes. The top 3 are NASDAQ, S&P 500, and Dow Jones, right? These are sort of, what most people feel, that represent, at least the domestic United States. And if you are invested in it, that's how you feel. The one down here, the blue one, that's SaaS. Okay, so that's the EM Cloud one. It's SaaS. It's down 50%, more than 50% from its high, and it has stayed down. Once again, probably fully related to the chart we showed you before. But we have not come back up the way the sort of the major indexes has. Actually, I mean, it's kind of confusing to me. I'm surprised we have stayed down this much. I don't know if either of you, rather than just talking about, yeah, it does feel bad. Do you feel like there's a reason why the cloud index hasn't popped up the way the other indexes have?
Well, again, we could do a webinar on this too, but so I like, okay, so when we look at like the peak of things, right? We saw forward revenue multiples in publicly traded SaaS companies. So this blue line, folks, when we're looking at it, what is that composed of? That's companies like Salesforce, Adobe, Workday, CrowdStrike, Cloudflare. So it's composed, with all of those billboards that as we drive down the highway in San Francisco, we see. That's what that is. And there's really like this B2B recession happening still. If you look at, the economy overall, and you look at, the lines here that are up and to the right, they have more exposure to the consumer. And surprisingly, the consumer has held up a little bit better than B2B. And so when we just we look at that blue line, all of those things that we've all mentioned, that are impacting the small companies, the startups, the ones who aren't publicly traded companies, they're impacting the big folks as well, right? Their access to capital isn't the same. Their risk appetite isn't the same. Rates have shifted. And so there's been a pullback. And, when we looked at kind of the peak of things in 2021, we saw, and I don't know if it's the Bessemer one, but we certainly saw like revenue multiples. I think the median was maybe like 18 and the average was probably pushing like close to 30. Now we're seeing those forward revenue multiples, way down, like 6, and maybe the average is like 10. And so that just trickles in, everywhere. Part of that is growth. They're just not growing as fast. Part of that is, there's less seats. Part of that is, again, they're just worried more about their margin. So
Yeah,
I
there are
would,
definitely things that are specific to SaaS that is really hurting us. Well, Harry, let's move on. Actually, we are running a little behind, so I'm going to move us along.
we're having too
Interest,
much fun is the
yeah, yeah,
problem.
yeah, that's right. We'll actually move from the bad news to stability news. So I think we see stability in the numbers as well. And so, Kerry, I'd like to talk to you about that. And a few things we're seeing is one, look, budgets are not increasing really. In fact, there are fewer budget increases. But also budget cuts are also less common. And in fact, most of us have static budgets, right? So our budgets are staying the same. So that's what for most of you out there, your budgets are staying the same. Now that's also true for headcount. So this slide, also says that, this is not moving as much, but fewer of us are shrinking, which is great, right? Because there was a big period of layoffs. Well, actually, a good bunch of us are growing, but most of us are staying static. So any thoughts on this, Kerry, of these last two charts?
Yeah, I mean, I think you nailed it. The number shrinking is back to what it was in 2022. So, okay, good. And I don't know that it changes very much from that in normal kind of years. The big difference is the number growing. So if you're a SaaS company, you sold an awful lot of things to an awful lot of companies leading up to 22. And the truth is, many of those companies either didn't need it, couldn't use it, or aren't growing themselves anymore. And so you're going to have a hard time growing that particular, there's a lot of business that was done that just isn't going to be and wasn't repeatable. And now I think in this much more steady state environment where, folks of us who've been around for a few years are understand, we work with a lot of folks who've really only seen go, 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 go. It just, as you pointed out on that chart, it looks weird in the chart. It is weird. Things aren't like that all the time. I mean, I've been in B2B and mostly in San Francisco, Silicon Valley for most of my adult life. And so we've seen it before. 2000 leading up to 2000 was another one of those things where everybody bought everything on the way to 2000 and nobody bought anything for a little while after that. And there were just some tough times, and then it steadied out. So I think that's kind of what we're seeing.
Kerry and I are here to tell everyone in the audience that it will get better. Like that we have
Yes.
seen this before. All right. Well, actually, let's talk about some other numbers, which I think are interesting. That really is about sort of steadiness. So 51% of CS teams own the renewal process, and that's slightly up from 48%. So it's slightly up. In the background, actually, what's interesting is that, if you look at the numbers for the folks who are not CS, sales took a hit. They actually fewer people reported that sales own the renewal process, and it's been moved to a more of an account management team, so a dedicated resource to own renewal. It's also true for expansion. So 41% of you, so less of you, but still significant, still the biggest bunch of you own the expansion. So basically selling more. And underneath that is also similar, that the sales team took a hit in terms of owning expansion, and that has moved over to a dedicated account management team. Kerry, any thoughts on sort of the stability? I think that's pretty understandable. But the shift from sales to account management below that.
Yeah, so everything that you just said, I agree with. Also, I would encourage everybody. Prior slide we saw a movement from 51% to 48%. Here, 41 to 43, or from 43. Don't think of those as changes. Those are probably not statistically changes. That's steady state, right? So that's okay. And then what we're seeing under that is, I think, some experimentation. Right? There's still some experimentation in the market about who owns what, and who's going to be doing what. So we see about half, 40 to 50% steady state, and then experimentation under the covers. And I think part of what has to happen is a little more advocacy of what best practices are, events like this and others that can help those companies that are still shifting and moving things around to understand what the best practices are.
Yeah, I agree with you. A couple of things. I'm going to skip a few slides just to get us back on track. Another metric that I thought was interesting was most CS budgets were kind of like rattling around a bit, but the companies that had really strong NRR, 111% plus, they're 29%. 29% of you do that. That's fantastic. Just a great NRR. Your CS budget increased, right? On the fold. So look, I mean, probably no commentary needed, except that if companies that do great NRR, how impactful it can be, right? You're actually growing your company 10% just based on your own customer base. That's just a remarkable thing to do. And any CEO, any CFO is going to want to invest in you, in your department. So, if you, it's odd, of course, like if you want investment, if you want budget, you're going to have to, deliver. So, probably no comment needed on that. Actually, let me skip to this one. And this is sort of for you, John. So in-person meetings are still happening. So when we ask the question, are you meeting with your customers? in person, and only less than a fifth of you say never, right? It's either once a year, once a quarter, and even some of you once a month, which is frankly mind blowing to me in this day and age. John, I know you think about events all the time. You think about in-person meetings all the time. What are your thoughts on this? That people are still meeting in person?
I think it's wonderful. And I think like, when I was running a customer success team, we had 130,000 customers, and I can count on my fingers the ones that we'd spent time with in person who churned. I think in this environment, one of the ways to cut through the noise is to really know your customers. And, if you're certainly in like an upmarket segment where you can afford the budget to see those customers, and you can allocate people appropriately to see your customers, and the margins make sense, it's really, really important to spend time. And I think actually one of the observations that we've had through the meetup, which has certainly grown over the last 10 years, is people, I think, are craving personal human connection like never before. And that has to fit into your CS motion. It has to fit into your sales motion. So yeah, big fan of this. I love the energy of people in person. There's nothing that beats it. So I'm stoked that this is the case.
Yeah, I don't know about the people on the call, but it's harder to meet customers now, right? Because there's no headquarters for some of you. If there is a headquarters, you're not there, you're somewhere else. And so I think meeting at events is actually is something that is replacing meeting at HQ. So this is sort of what I'm seeing as well. All right, a few things to think about, that came out of the study. Every year we ask, hey, what's in your charter, and what do you think about the most? And then we give the recipient, the survey takers, a list. It doesn't change very much. You can see it kind of moves around one slide. It's actually really consistent over the years. And to me, the big surprise is renewals and expansion are not 1 and 2, right? And by the way, they're not 1 and 2 in 2023 and 2024 when it was really hard. So John, I know people will argue about this. Should renewals and expansion be your number 1 and number 2 charter if you own a CS team?
Okay, so one of the best pieces of advice that was ever given to me in building a career, 15, 20 years ago, was sit as close to the product. So build the product as you can. Okay, so sit as close to product or sit as close to revenue as you can. And I think that's, something that holds through across all macro environments. And, now when we think about things, it's not growth, and growth. It's the 3 most important things. It's growth, burn, and margin. And so, I'm surprised actually that more CS leaders don't want to wrap their arms around owning that renewal process, the expansion number as well, because while those are lagging indicators of all of the work that you do in customer success, onboarding, adoption, enablement, the reality is they are the metrics in our Rolodex of metrics that sit the closest to revenue. And, being close to revenue, having that through line, knowing exactly how you impact the bottom line of the business is one surefire way to have job security. And so I would love to see this rising up. It doesn't mean that your sales or your customer success team becomes, like used car salespeople. That's not what I'm saying. What I'm saying is connect yourself to the metrics that truly matter in a business. And, expansion, NRR, when we look at, there's correlation data between NRR and the enterprise value of a customer, right? And so it is one of the biggest drivers of enterprise value. Why wouldn't you want to tie yourself to that number? So I would love to see this higher next year.
Yeah. Kerry, any thoughts on this? I know you've seen a lot, from your perspective as an analyst, you're really focused on the metrics. When you think about charters, do you want a metric-driven charter to be on top of the list?
I do, probably for a different reason than maybe anybody else would be thinking about right now. And that is that we've just done a ton of research the last couple of years on buying processes. And most buying processes in B2B are not net new capabilities for a company. They're either buying something again, they're replacing something they already have, or just augmenting something that they already have. And so given that most of the selling is not net new selling, one of the things that we find is that buyers are very, very consistent. They do not talk to sellers during the first 70% of their buying journeys, even when it comes to renewals. That's what they say. But they're choosing whether they're going to buy from a company in that 70%. Then they talk. They want to make that choice. Then they want to talk to a seller. So here you have an opportunity to have the seller have a day-to-day conversation with your customer, right? To already be in conversation with a customer and to own the sales part. And I think the more I think about it, the more I think, yes, I want the person who has the relationship with a customer and can be engaged with them all the time to be responsible for converting that revenue or retaining that revenue because they're the ones who have that relationship and they're the ones who are going to get to have the conversations because your seller is not. If that seller's just coming around for the renewal period, they're not actually going to get to engage. That's what buyers are saying.
That's interesting. I'm going to repeat that. So during the buying process, 70% of the way through, that's when the buyer will want to talk to you. And by that time, they've pretty much made their decision.
Right. Yeah. And this is
We're all
2 years
screwed,
of
aren't
data.
we? We're all, I mean,
Yep.
okay. I suppose you
Well,
just have to make sure you have a great brand, make
that's
sure
right.
that you're, and then if you're CS, like that you are consistently talking to them during the whole period when I guess they're always making the decision. So if you're there in the beginning, okay,
Yeah.
yes, yes.
Yeah.
Well, then you're actually arguing for onboarding and adoption, I think, to be number one
Right.
and number two. Oh, interesting. Okay.
Right.
Right.
You need to be
Yeah.
providing a great experience all the time
Yeah.
and continuing to drive preference all the time and then rolling that preference into the decision. And, it's just that it's this thing that we didn't really know about until we did this research. But buyers don't want to talk to somebody who's going to pitch them while they're deciding, which is the opposite of the way that we do sales in B2B, right?
I'm going
So
to bottom line this charter thing. First of all, they all count. Of course, it all counts, right? And then as a CS leader, guess what? You have to worry about all of these things. Maybe you talk about onboarding and adoption internally, and then you talk about renewals and expansion, at the C-suite, at the board level, right? And I think maybe that's the way you think about it. It all absolutely matters. They're intertwined. It is kind of bananas. All right, here's another one. We also ask, hey, these are CS strategies and best practices. Have you done them yet? And most of you have not done most of these. So that's not great. But now I will say this is a lot of stuff to do. I mean, I look at this list and it kind of, there's a lot to do. We're asking CS leaders to, really put together difficult strategies that are often being done for the first time at your company. So it doesn't really surprise me that much of this is not implemented yet, but some of these numbers do feel very low. Kerry, any thoughts on the numbers here?
one of the things was that this differs by what size company you are. So if you're very small companies, you probably haven't done much of this. Mid-sized companies tend to have the highest completion rates of these things. And then the larger companies haven't implemented very much. So I think on the small end, haven't gotten to it yet. Things are moving too fast, don't have money. Big end, behemoths can't get to it because it takes so long. But in the middle is kind of where a lot of SaaS companies, I think, sit. And that's where these numbers are best. But I think what was also interesting here is just the extent to which, a lot of companies have started to do a lot of things, and most companies have not finished any of them. Or don't feel like their implementation is complete. So maybe the advice is just, do something, do it completely, do it well. Understand what's important to your company to drive the results, and then actually do it.
Yeah, I agree. Well, let me bring it home because we do want some time for some questions from the audience. Look, I think the study has shown a few things. One is like it was tough. Two, that it feels like it's stabilizing, which is really good news because you can't accelerate without stopping the deceleration first. I think the stopping the deceleration has happened. But the good news is the SaaS recession has done one thing. It should not only shake CS a little bit, but it basically made the revenue retention metric one of the two key metrics that folks really care about when evaluating a B2B subscription company, right? There are really two metrics that count. It is growth and it's retention. And that's it. And well, speaking too much, but these are the two qualifying metrics. If you don't have decent numbers for those two, you're not going to be seen as a great company. And people on this call listening in, you own one of those two metrics, right? And that's a really interesting place to be. One of the things I'm seeing is if you take a look at public company analysts, they're talking about NRR a lot. In fact, they're kind of leading the way, and which is kind of actually a little bit confusing because NRR is not what is known as a GAAP financial metric, right? So GAAP means generally accepted principles. Everyone agrees on what it is. NRR actually very frustratingly can be calculated differently by different folks. So it's actually a tough number to try to do apples to apples comparisons with. Yet public company analysts are saying, yes, we have to consider this as one of the key metrics to evaluate public companies. John, in the VC world, I'm sure like this. Am I saying anything that that feels wrong? Like is revenue retention the number one, number two metric that they talk about?
So I think it certainly differs by stage. Where I play at seed and pre-seed, it's you don't really have a line of sight on it, and maybe even as you get to Series A, it starts to come into focus. Certainly, though, like as you approach growth, it is absolutely imperative. Like Kerry, I imagine 6th Sense is probably in process of writing their S1 right now. It's about at that stage, and retention is so important, and the expansion. You look at actually like those publicly traded multiples. NRR, one of the most valuable companies over the last couple of years has been Snowflake, and Snowflake has this incredible NRR number. Mind you, they have a pricing model that leans into that. I was at the Databricks conference a little while ago. They have this incredible NRR number. Public analysts are frothing over that. So yeah, I think like retention is king. The amount of extra dollars that you get out of your existing customer base is really important because that's really how the compounding nature of these subscription and consumption businesses works. Is if you can get more out of your existing install base, you can really highlight that the growth is quite durable. So yeah, absolutely, it's growth is king. I think NRR fits actually into that growth metric, and then the retention component of that is critical. So yeah, absolutely. One and two. Everything and everybody that I talk to,
one and two.
agreed on that.
Yeah, it's great to be in the top two. So I think maybe we'll first of all, please put questions in the question box. We will start answering some right now. Look, this was customer success's first recession, right? I mean, customer success really came in as the next great enterprise department over the last 10 years, right? And so, and we're still here. So there's, given where revenue retention is and its importance in evaluating companies, I don't see a world where customer success doesn't exist at B2B subscription companies. Now, the form, what we call it, how we structure it, that may change. But managing the customers, keeping them successful, retaining them and expanding them is a big part of what we'll do. So the good news is that you've chosen a good place to be with one of the top two metrics. So I'll stop sharing and maybe let me start getting some questions for you all to answer. All righty, give me a sec. All right, so Chris has a great point. I said that the top two metric, one's growth and one's NRR and one's revenue retention. Guess what? One feeds into the other two, right? So in fact, the component of growth is really strong retention. So yes, it is a doubly, compounding thing. Okay. Question maybe one of you would know. Okay, I have an idea. So when we say that CS ops roles are being, you know, is sort of shrank in 2024, where's that going? Are they being, where's the ops function happening? Because you still have to do some ops. Is it being merged into sales ops? Is it maybe someone is doing maybe a CSM is doing it on the side? What's John, Kerry, do you have a sense on like who's doing ops now? Like that 10% still has some of it still has to be done. Who's doing it?
Yeah, so I think like by and large, it's been consolidated into the go-to-market ops function. So sales to a certain extent, marketing, and customer success. I think the through line there too is like, and we didn't cover it today, but where is customer success reporting to? We still know that, by and large, a lot of customer success organization support or fits into the CRO organization. And so just a natural efficiency when you have to cut cost is to consolidate that function, and it's all under one leader. So they've moved that in a lot of businesses or a lot of folks that I've talked to into one consolidated organization.
Kerry, you're nodding. Do you agree with
Yeah,
that?
no,
Yeah.
that sounds right from what I'm seeing.
Yeah. Do you like that, by the way? I mean, like to me, it feels like there's always often a swing to like departmental ops teams and then a consolidated, rev ops or go-to-market ops team. Do you like if you had a company, let's just say at scale, would you prefer one or the other, sort of as a way of running a high functioning company?
I think so. I think like the pain points of it are very obvious, right? The needs of customer success sometimes can get dwarfed by, the bigger, better at selling voice in the room, which is sales. I think so. Those pain points are very obvious. And I think though, like a well-run organization, I had the fortunate position of when I was the VP of customer success for a good chunk of my time, not all of the time. Sometimes I reported directly into the founding team, but for a good chunk of my time, I supported the CRO fit into that organization. I actually really liked fitting into that part of the organization. I know that's maybe the anomaly on that, but when you can connect the dots on the customer from point of sale to onboarding, expansion, renewal, adoption, and really have a customer journey that is commercially oriented, but also puts the customer at the center of everything. I think it's okay to have a consolidated function. I think like maybe that's a North Star state for a lot of us. But the reality is, there's skills gaps and there's priority gaps. And
Mhm.
so it takes a special organization to execute on that. But
Yeah, John, I agree with you 100%. We're having, I think on LinkedIn today, I was talking with someone and basically like the CRO seems to be, an up and coming title. And it makes sense, right? Everything from marketing, like from top of the funnel all the way to the bottom. It just strikes me that most CROs today are still very new sales focused. But if there is a CRO that really can drive an account from sort of awareness building all the way to expansion. I mean, that is really interesting, isn't it? I mean, that's really interesting. But imagine would just take such a special person to make that happen. Maybe that will happen.
I'll tell you, I
Yeah.
always say to young CS people, if you want to accelerate your career, go do the tour of duty in sales for a little while. You
Mhm.
might not be a forever thing. Maybe you have to enter through the SDR window, but you'll get a really good appreciation for the other part of the journey. And that's really hard to. And I think that can round out, and then you truly can become that next generation CCO, which I think so many people aspire to be.
So let's a couple of questions on from people who are from smaller companies, and you mentioned this real quickly earlier. These are folks who maybe are a little too early to have revenue retention be their core number, right? There's maybe still trying to find product market fit. Maybe they haven't gone through enough renewal cycles. They don't have enough companies. Until NRR is their North Star metric, what should their North Star metric be, right? As you are actually, yeah, what would you advise like startup companies that are trying to find product market fit? What is their metric in the CS side if you're running a CS team?
So I think if you're that first head of customer success, or you're even maybe that small C customer success leader, you know, your goal, your personal goal, and the goal of your team should be to simply know your customers at a deeper level than anybody else in the organization. You want to make sure you know that you're doing it right when you're getting phone calls from your CEO at 9 o'clock on Friday night, and your CEO is asking you about those customers, right? That's a way to make yourself like indispensable in an organization. You know, I talk a lot about founder-led customer success. I think in the beginning, the way that you find customer success is through your existing install base, right? And the first renewals are actually what locks in product market fit, because that's when the customer actually says, hey, you promised me something and you delivered on it. And so I think early days, you know, really be thinking about like, are we delivering on those promises? Make sure that you can share those stories and make sure that the organization turns to you. I think sometimes we optimize for process maybe a little bit too early, before we truly exit that product market fit phase. So that's something I'm trying to educate CEOs on. And I think the role that the CS folks have to play in that is just like be really, really good at that part of.
Yeah, you better know your customer. You better be that person. Kerry, what do you think? Is there, I mean, I do think getting to know your customer and being that point person, like, you know, that will put you in a path for success. But is there a metric that you would advise, like, you know, focus on this metric before revenue retention?
Yeah, I think John covered it really well. And just circling back for 1 second to the prior conversation, I would also think as we think about the customer success role, one of the things you have to be thinking about is are the conversations that the customer success that you have to have with a customer when they're onboarding, when you're trying to get them really enabled and engaged in the product, are those deeply different from the sales conversations that you would be having? And is it likely that somebody's going to be doing those effectively? One, are they going to have time? And two, are they going to have the expertise? In a lot of cases, the answer is just no, right? That you need somebody with a deeper level of expertise actually operating the product to be engaging on a regular basis, even if your sales reps would have time to do it. They probably are not enabled to effectively do it. And so then you've got to start doing the math around what do I have to get in terms of better retention, better increase in revenue if I'm going to add headcount who's going to be specifically charged with making those customers successful.
Yeah,
I
I
would
believe
work
that.
backward from that.
Yeah, I think that's right. I do have one quick answer for the startup is, you know, I actually like metrics like CSAT and NPS. CSAT and NPS, like, you know, those are quick metrics, easy to ask, easy to get. And so work on getting those really strong, and then ideally retention follows, right? So well, hey,
Read all the comments. Read all the
read,
comments.
read all
Those
the comments.
surveys is what
Read
I
all
would
the
say,
comments.
because I
Read
think
all the
that's where
comments. Yes, yes. Read all the comments. Yes. All right. Well, hey, that was fantastic, John. Kerry, thank you for joining us, and thank you for being co-sponsors on the 2024 Customer Success Leadership Study. We'll be doing it every year. We'll want to see how CS changes over the years, and it was fun talking to you. And everyone, thank you for joining. You will get a link to a recording of this webinar tomorrow, and as well as a link to the study. Okay, everyone have a good rest of the day. John, Kerry, great to talk to you. We'll see you soon.
Thank you.
Thank you, everybody.